I'm here with Patrick McKeegan, Portfolio Manager at Franklin Global Growth. Patrick, thanks for speaking at the Inside Network's Equities and Growth Asset Symposium.
My pleasure.
The tagline is sailing through the headwinds. In your opinion, how should advisors try to achieve this?
Yeah, I think it's been a challenging market in some respects, given how strong performance has been in aggregate. Challenging for our strategy in particular. We focus more on mid-cap portfolios, which are a little bit more out of favor at the moment. I think, though, what advisors need to do in this environment is be true to their strategy, be true to their style. This isn't the time to drift or to chase. And I think people have reflected that the market appears expensive in an absolute sense. But if you parse through that, a lot of the mega caps and kind of that semiconductor complex that have driven the recent rally are a touch expensive. But when you peel that back, the rest of the market, I think there's a lot of opportunity and isn't nearly as expensive as what some of those headline metrics suggest. So in the face of some of those headwinds, I think people should be creative, be original, look for opportunities outside of some of those well-covered themes, and focus on mid-caps.
Well, speaking of those well-covered themes, we've had a handful of prominent tech conglomerates dominating returns in recent years. What are the reasons to be cautious about their forward-looking performance?
Yeah, market performance has been driven by a narrow set of companies, and then those companies really reflect a narrow set of themes. So in some respects, you have concentration on top of concentration, which I think is risky. I don't disagree. There's a number of powerful growth drivers that are represented in that set of companies, but I think that it would behoove investors to continue to be diversified. I think there's a lot that's being overlooked. And it's difficult, I don't have a catalyst in terms of what will derail that tech outperformance necessarily. Valuation, as we were discussing, is a bit elevated. Those companies have a lot of cash, and they're using that cash to compete with each other to an increasing degree. So you have these giants who are going after each other's markets. The regulators are involved. There's discussion around trade wars. So there's a number of factors there. It isn't necessarily going to be smooth sailing. I don't know exactly how the next 6 months or year are going to play out. But I think that it would behoove investors to continue to be diversified and focus on opportunities throughout the global economic landscape.
Well, speaking to those opportunities, where do you see the next, drivers of outperformance? What are the themes that will really capture investors' attention?
Yeah, it's funny. Healthcare is a little bit out of favor at the moment, isn't it? And I think what you had there was kind of a demand super cycle around the pandemic, and now it's kind of been cast out of favor because there's been a period of digestion following the pandemic. We actually, from our channel checks and our work monitoring the industry, think that digestion is largely behind us. And so I think that there's a number of secular growth opportunities that you'll start to see reemerge in healthcare. One opportunity is in precision medicine. An investment that we have there is Daiichi Sankyo, a pharmaceutical company in Japan. Another very attractive trend, I think, is in robotic surgery, where we're still in the early innings from a global growth perspective. And then this might sound counterintuitive, but I think that there's opportunities in tech that aren't being discovered as well. Cybersecurity, you think about all the hacks that are happening on a global basis, continues to be a fast-growing area of the economy. Supply chain modernization and some of the technology that people are investing in there also continues to be very strong. So, and finally, even in digitization broadly, there are sectors of the global economy, think about maybe the public sector or maybe think about construction that haven't invested in software and digitizing their industries to a substantial extent. And I think we're on the cusp, and the leaders right now are only still now emerging. So I think that broader view of opportunities in growthier areas like healthcare and technology in particular can be rewarding for investors who are a bit more discerning here.
And you focus on pure plays mostly. Can you tell us what that means and perhaps give an example?
Sure. So a pure play company, kind of in our parlance, is a company that's concentrating a substantial part of its business and therefore kind of its revenue exposure to a couple of products or services and has concentration really around a specific growth opportunity and trend. And I think that that's powerful because the culture of the organization can be very focused. Research and development budgets can be very targeted. These companies then have the ability to, in our opinion, have a leg up from an innovation perspective and really be ahead of the curve. I think the other thing from a portfolio management perspective is in constructing portfolios, we have a approach where we want to be concentrated in terms of only having about 35 positions in the portfolio, diversified in terms of having companies that are doing different things and representing different economic growth drivers. So if you're investing more in conglomerates, then you have diversification on top of diversification, and you risk just kind of gravitating more towards the mean. by investing in exciting best-in-class pure plays, I think that gives us the best ability to build an attractive, differentiated portfolio.
And what do you think will be the biggest surprise across markets in 2024?
In 2020, we had a global pandemic, and in 2022, we had a land war in Europe. So I think I could do without any big surprise maybe. But I think that there's still a number of areas, inflation isn't solved for a lot of economies around the globe. Central bank actions are still somewhat unpredictable. There are still a lot of geopolitical tensions. And then you have this narrowness of market performance. And then on top of that, I think the U.S. maybe most of all, but there's a number of elections happening around the world in 2024. And there's going to be political stumping around that. There's going to be shifts in policy around that. So there isn't any one particular piece that we have a view on. We have more of a bottom-up approach to investing. We don't really make macro calls. But between that list of factors, I do think that we could see some surprises, and I think that investors would be smart to continue to be positioned in more of a diversified sense and to have a number of economic growth drivers represented in their portfolios as opposed to maybe succumb to some of the narrowness that we've seen recently.
Interesting times indeed. Patrick McKeegan, thanks for joining us.
Thank you.